Welcome back, everyone. This is Si Win Yi, and I'd like to go over another video with you. This is be very, very interesting. So let me share my screen, and here we are. And I'm going to use Redfin data, which I've been using quite often, consistently on a weekly basis. But not just Redfin, the other mainstream website resources could be like CoreLogic or Realtor.com or Zillow.com or National Association Realtor.com and or Black Knight or John Burns Consulting. So a lot of these public websites, they provide daily data, weekly data about what's going on in housing market nationwide. So anyway, the purpose of this webinar, this video, is that I'm going to share with you. Actually, the title of this video is tunnel vision. I call it tunnel vision. People too often have short-term tunnel vision, meaning they don't see the light at the end of the tunnel. You have to think long-term, right? If you want to buy a home, primary home to live, an owner-occupied property. If you can afford it under today's financial challenges and economy and the housing challenges or what have you, you can afford it. If you like the house, if you like the neighborhood, if you can afford it, you have cash reserve, if you could stay in this neighborhood, live in this house for 10 plus years, historically speaking, the housing prices will always increase over time. Yes, from time to time, every decade, every couple of decades, we will see some kind of correction or bubble, if you will, but not necessarily a crash. A housing crash, the 2008 housing crash, is a one-time phenomenon, anomaly, which happened only one time since in the past 100 years, since the 1929, the Great Depression. That was the only time, and 2008 housing crash are the only time where the housing market and the economy has plummeted so much. But I'm not going to discuss about that. I want to be optimistic. I want to be positive. I want to give you guys hope out there that yes, we're being bombarded with a massive amount of negative headline, doom and gloom, the world coming to an end, buy real estate, whatever, become a renter forever. No, don't fall into this type of narrative, right? So again, without further ado, let me go ahead and use Redfin as a scenario. Doesn't matter what website I'm using at this moment. We've been seeing, especially the past 9 months of 2022, everything is plummeting, right? I mean, you have other YouTubers out there, they use this negative headline, this numerical minus 80%, minus 50%, or minus whatever, just to, clickbait. They want clickbait. They want people to to sign up for their channel, right? They want to build up their channel algorithm. So the best way to do that is to create some very, very negative headlines that people gravitate towards. That it's just that's how it is. We're talking. There's another word for it. I call it fear porn. FEAR dash porn, quote unquote fear porn. So people keep watching this kind of fear porn YouTube channels, and there's so much negativity, and a lot of the uninformed YouTube consumers out there, you buy into this kind of negative narrative, then you believe into it, you believe into this kind of negative stories, and then that could adversely impact your financial future because you're being brainwashed, you're being conditioned about from there's so many YouTubers out there, popular channels by no means, so they can gain their clickbait, and they can have a lot of subscribers on their channel, so they can sell products sell products, advertisement, those kind of things. These all in the name of profit. I'm not saying that's necessarily bad, but they are. I don't believe they're ethical they're moral, if you ask me. So I'm just gonna put out the best content I can put out, and hope I'll give you the transparency, the credibility, and yeah, I'm not going to overhype anything. I'm just going to go over my 30 years of real estate investing experience. I have helped thousands of real estate investors to buy investment properties in the low cost, prudent market where they can cash flow, they can buy property and buy and hold for the long term. But I'm not here to discuss that. I'm here to discuss just to give you another great content. And by the end of this video, hopefully, if you receive value on this video, please smash the like button and subscribe to my YouTube channel. I'm trying to build myself up, as you know. And finally, just submit your email to my email newsletter database so you will receive weekly real estate investing information that will help you personally, financially for the long term. So look, if, all the negativity, everything's down, right? New listings down over, nationwide, 400 metros, us covered by Redfin. So see, I mean, right now this black market is 2022, 21% down in new listings year over year compare. See, the problem with Redfin and other popular websites that we all gravitate towards in the YouTube channel, you're comparing this year 2022 to last year 2021 and the previous year 2020 and maybe 2019. It's such a narrow comparison. I mean, there's nothing compared to 2021 because it's an anomaly. It's a once in a lifetime occurrence. So you have to look at the big picture. You have to look at the historical data to become educated, to become informed. So you have so many YouTubers out there that have gained so many subscribers. They always compare, 6 straight months of a reduction in sales compared to 2021, 80% reduction. I mean, it's all numbers game. It's all very distorted, very inaccurate. It's just fear upon, and Redfin is no exception. I mean, I'm just using Redfin as a foundation. Look, new listings down. Yes, I know. I've discussed that on many other videos. Let's look at what else. Active listings nationwide. Yep, it's down, going down. It was up by almost 10% year over year from 2021, but it's trending down. I get it. Let's look at pen sale nationwide. But by the way, real estate is local. Okay, there's no such thing as a national real estate market. So real estate is hyper local. It's down to the neighborhood, it's down to the block, it's down to the house, it's down to the APN. APN, you know what I mean by APN? Anyway, the lot, the number, the official technical data of each particular house have an APN in the county courthouse record. Anyway, pending sales way down 2022. A whopping, see, I could really over exaggerate numbers so I can bring in clickbait kind of a scenario, but I don't want to do that. I have too much ethics. I can't stoop down to the level of most, YouTubers out there. It's just mind-boggling. Pending sales is almost 38% down year over year from 2021. Again, when I say 2021 is an anomaly. 2021 is just an amazing historical year that is a short-term comparison. You have to compare from a historical record over the past 30, 40, 50, 100 years. That's the best way to compare to historical data, not from, 2021, 2022, is way below 2021. It's just a short-term tunnel vision, narrow-minded, doom and gloom comparison. So having said that, I need to compare the last few years anyway, but take it with a grain of salt. This kind of correction scenario, it'll blow over in a few years and everything will balance out in the future. We're just going through a realistic cycle from time to time, and that's the way it is. So deal with it and be positive about it. So pending sales, same thing. Let me see what else. So many, everything's down. Home sales is down. Volume crashing. Transaction crashing. Just when pending sales is down, when new listings are down, that means there are less buyers and sellers are not selling. So the market is at a standstill. So, and the inventory is so low as it is. I will cover the low inventory momentarily on the future slideshow in the next few minutes. But look, just bear with me for right now. So everything's down. So what else? Let's look at the medium sales price nationwide in the 400 metros. Yes, I understand. At the middle of the year, back in June 2022, the median price of a home nationwide is $391K. Now it's down to $358. So we're talking 5, 6, 7% reduction over the past 6 months, ever since the interest rate has skyrocketed from 3.5% earlier, the first quarter of 2022. Until back in second quarter 22, the last 8 to 9 months, the interest rate, mortgage rate has increased anywhere from 6 to 7% as we speak. So I know toward the end of the year, in most markets, all the 10, 15, 20% appreciation from 2021 to 2022 that we see here in the middle of the year has gone to zero appreciation this year over year from 2021 to 2022. But then again, for many of you that purchased back in 2019 or 2020, you still make massive amount of appreciation. So if you look from 2019 before the pandemic, already median price 267, 5% appreciation, then to 2019, 2020, 15%, that's 20% appreciation. Then from 2020 to 2021, 14%. We're talking at least average of 35% appreciation in the past 3 years. So what of this current ending the year 2022 with almost 0% appreciation? You still make, on the average, there are some neighborhoods a lot more than others, at least 35% appreciation in the past 2.5, 3 years. What if your house went down in value as indicated by this trend by 10%? 35% minus 10%, you still gain 25% appreciation in the past 3 years on the average. On the average, some people gain a lot more based on a particular house or neighborhood or a particular market, so forth and so on, right? So you still win. Do the math. You gain 35% appreciation in the past 2.5 years. Even if you have reduced by 10%, you still gain 25%. So no regrets for people that bought back in 2019, 2020. So no regrets whatsoever. I call it a major win, as opposed to someone that didn't buy, to stay on the sideline for the past few years and will most likely going to stay in the sideline for years to come. It's just that the negativity mindset that too many people have out there. So anything else I need to show? Price drops. Yeah, price drops. We see a lot of price drops because sellers are, putting their house at a higher price than what the market demand. Yeah, I get it, but that's also, it'll pass you by. Let me see what else I need to show you. Yeah, days to close. Yeah, now it's taking 25 days to close a house, as opposed to 10 days during the 2021. So 25 days is a normal closing timeline on a historical basis. So there's no big deal. What else? Home sold again. Sellers are not putting their homes on the market because they are locked in at a historical low rate. So they have no incentive to sell. Most homeowners, most sellers, and many buyers are not buying because of a lack of affordability. Their mortgage payments is higher. So they are pausing. They are waiting on the sidelines. So buyers not buying, sellers not selling. That's why you see all this trend, everything trending down. Volume sales trending down. Active listings trending down. New listing is trending down all over the place, and especially during the last quarter of this year, any fourth quarter of any year historically because of seasonality, because of people are not doing transaction during the holidays. We will continue to see this trend coming down. So, and prices in the major market like West Coast, California, where I live, and Upper New York, major metros, Upper Northeast and California, and Boise, Idaho, Austin, Las Vegas, Phoenix, all these trophy markets, pandemic boom and bust. I get it. But there are other 200, 300 metros in other part of the US are doing very well. Their home prices are not coming down. So you have to look at the big picture. Don't fall under this narrative. So let me see. Average sale to list ratio. Yeah, you can bump. Yeah, you can use numerical metric to paint a negative picture. So what? Right now, average sales to list ratio as by Redfin. Homes are closed. Let's go. The buyers are able to buy at 2% below the final asking price. Okay, the buyer has some negotiation power right now because of all the reasons, lower demand, so forth and so on. No big deal, you get a slightly better deal as a buyer than before, so you have more negotiation power. So that's not gonna affect the long-term aspect. Now, month of supply, that's something that I'm concerned about. I mean, 5 to 6 months is a balanced market. Right now, nationwide, the 400 metros as tracked by Redfin have 15.6 weeks of supply of inventory. So 4 divided into 15, a little bit less than 4 months supply of inventory. So still a slightly seller's market, believe it or not. It's not a buyer's market yet. That means seller is still have an advantageous position. They still call the shots. So we are still a low supply of inventory nationwide, and I will discuss more about that. When you have continued decrease in active listings, when you have the continued decrease in new listings, when you have pending sales decreasing by double digit year over year from 2022 to 2021, and all these numbers going down, that tells me that there's not enough homes are being bought and sold, that it'll exacerbate the supply of the inventory moving forward in the next few years. So as a result, consequently, as I go back and let me share with you with this slide, and then my takeaway is this: look at, some of you have a tunnel vision. I say it again. You have to see the forest from the trees. The mortgage rate is still low on a historical basis right now. Is 6.63%. The last I checked, I'm not exactly sure as of this week. I know some of you guys many of you are just are really are shocked by it, or really just are really adversely affected by it. But if you look at a historical basis, if you look at the early 1980s, the mortgage rate were, you can see right here, almost 18%, and people were still buying home back then. And look at 1980s, 1990s, the mortgage rate like anywhere from 10 to 18%. Then when I purchased, so when I purchased my several homes back in the 90s, I paid 7 to 8%. So I didn't think twice about it. Everything was fine. I'm not panicking or nothing like that. So yeah, I mean, 6 or 7% is, to most of you, you just fail to look at past history. That's all I'm saying. But I know with the skyrocketing of home prices in the past few years, and the interest rate between 6 and 7% is causing many of you to panic, to stay on the sideline. I know the income, your wages have not risen to coincide with the rising home prices in past few years. So therefore, the 40-year home affordability is at the lowest. So a lot of people can't afford to buy houses, and I understand that. And it's very sad that the lower and middle class America or just are being impacted by all these, changes. So on a historical basis, interest rate is still very low. Here's something that you need to understand: the home construction has been way behind since the last housing crash of 2008. So for the past like 14 years or so, you look at these numbers. I mean, the data does not lie. The home construction in the past 15 years, it has been extremely low relative to demand. So the supply new homes has really, really decreased monumentally as opposed to the past decades before 2008. All right. So, and look at this. I'm not going to go over all these minutia of this data on this particular slideshow, but some housing experts says we are 6.8 million housing number of units housing shortage. So yeah, so demand is, I know demand currently is low based on the high interest rate and the fear of recession, whatever. But once demand comes up, watch out. I expect a housing frenzy. But okay, I'm not gonna go over the data on this slideshow. You can pause this slideshow on your own when you review the video. But I mean, look, it's clear cut. Housing market severe shortage is gripping the nation. Look at right now, we are right in the middle of this situation, and moving forward for the next 10 years, right now we need 1.3 million units. We're only getting built, average housing built less than a million. Look at the future. We need like 2.5 million units we built on an annual basis for the next 10 years, right? And we're not getting that. We're not getting that. Forbes magazine a year ago said the housing shortage is worse than ever. It will take decades of record construction to fix. Do you understand the ramification for the future? Low supply. Right now, the demand is not that high based on the mortgage rate. But what if the mortgage rate reduced to below 6%, maybe to 5.5%? Watch out. That would be my takeaway. America is short. You ask different housing experts, they'll tell you, they can only project, they can only predict. No one have a crystal ball. So America is short more than 5 million homes. And builders cannot make up the difference because builders, they are pausing construction because on the demand side and the interest rate is causing builders to hold back on new constructions. So that's going to exacerbate the low supply of inventory of new construction homes in the next few years. So, look at the long-term repercussions of what's going on right now. Sellers are not selling because they're sitting on a low historical locked in a 30-year fixed rate mortgage, right? And home builders are pausing construction. They're not keeping up. So we are short 1.7 million homes, and we need like 15.5 million homes to be built over the next 10 years. And we're not getting that. Look at this. Look at this. Look at this number. It'll mind boggle you. That's why I truly do not believe there's going to be a housing crash. Look at the data. Currently, sellers are locked in. It's a quote unquote locked in effect. Look at the massive billions of home equity, $40,000 billion home equity. Look, the mortgage debt is very, very low. The loan to value ratio is very low right now. The sellers, the homeowners is holding all the cards. You know what I mean? Sellers, they are dictating the housing market, good or bad. Sellers are they are hoarding on their low interest rate, 30-year fixed rate mortgages. 9 out of 10 mortgages have an interest rate less than 5%. Mind-boggling. More than 40% of homeowners don't even have a mortgage. They are free and clear. They're sitting on the mortgage less than 4%, and the current rate is 6 to 7%, and housing prices are higher. Why would any homeowner going to put their house on the market knowing they have to pay at least 50% more in monthly mortgage payment to move to upgrade to a new house, and they're going to get rid of the 3% mortgage rate to move into a 6 or 7% mortgage rate. No way. I wouldn't. So a lot of our mortgages, primary home and investment mortgages, are less than 4%. And I'm not going to get rid of those mortgages. I'm going to sit on that because so people that look, like I said earlier, the builder sentiment is sagging. They have very little optimism to build more new construction homes. The permits are down. They're buying less lots to be built right now. That's going to have an adverse effect for the long term. So the new builders nationwide, they will not. We're going to see in the next few years. They can talk about it. The shortage of new construction and the sellers not selling, it'll create a more of a low historic housing inventory moving forward to 2023 and beyond. Furthermore, look at this. This is eye-opening. This is truly eye-opening. Look at 11 million homeowners have a 30-year mortgage rate of between 3 and 3.5%. You think they're going to move? You think they're going to get rid of their historical locked-in mortgage? Almost 5 million have a 30-year mortgage rate of 2.5%. Oh my goodness. 13 million people, homeowners, have home loans less than 3%. 9.5 million homeowners have mortgage rate less than 4%. 6 million have mortgage rate less than 4.5%. You get the idea. 65, almost 3/4 of homeowners out there have a 30-year fixed rate mortgage locked in at 4% or lower. This reason alone, you don't need to learn anything else. That's why there will be no housing crash. In order for the housing crash to occur, we need to have stress sellers. There is no stress sellers. The foreclosure rate right now is less than 1%. The people are under stress. Mortgage delinquencies are at 1%, a historical low, especially compared to pre-pandemic levels of foreclosure. So any of you are waiting for foreclosures to occur, to come down the pipe, well, you might be waiting for a long time. Between January 2012 and June 2021, 12.3 million Americans' households are formed, but there are only 7 million available housing units to purchase. And I'm concluding 2 more slides. We're going to have high demand. Right now, demand is moderate or fairly low for the reasons that we talked about numerous times. Interest rate, recession impending, job situation, it might get worse, although the job report is still very, very positive. But you look at the millennials, 82 million millennials on a prime buying years right now. God, they are 30 to 40 years of age. Then 10 years from now, we're going to see Gen Z, 86 million Gen Z going to turn age 30 in about 10 years from now at the turn of the decade. So they could be the next layer of population demographics that are going to be in the home buying years. So we are way behind. I have to say that many people waiting in the sideline. I believe more people can afford to buy homes right now, but they refuse to do so. They want to time the market, which is, personally, I think that's wrong. But it's okay. I mean, okay, I'll talk about that momentarily. See, people back in 2006, they're born, not born, but right now, 33 years old today, these people, the millennials, are on a prime home buying years. Like I said, the Gen X, right behind the millennials, they're going to buy within 10 years. So, and of course, baby boomers like myself, we're still going to buy vacation homes, retirement homes, and investment homes. And there are still 76 million baby boomers out there that are looking for higher end homes, vacation homes, Airbnb, those kind of things. So at the end of the day, here's my takeaway. My takeaway is, yeah, you need to think beyond the tunnel vision. The tunnel vision is that you're so focused on the ups and downs the last few years. You know, the YouTubers, they use numeric headlines, YouTube image headlines to show all this reduction of this, reduction of this. You know, I mean, lack of sales, lack of transaction, all this means something to me. All this lack, you know, reduction of everything, home sales, volume sales, is is going to create massive low inventory. That's what I'm saying, right? So who knows, right? If the interest rate become 5.5% in the next few years, I see another housing frenzy. Is it going to be a post-pandemic 2.0? I'm not going to go that far, but still, my takeaway is still low inventory. I don't care how you juggle the numbers. I don't care how many YouTube channels you can watch that will tell you, you know, it's doom and gloom, uh, or this data. You know, data, you have to know how to interpret the data they'll provide it to you. If you follow the wrong YouTube channel, then you're gonna feed into their negative narrative. So be smart about it, get educated, uh, go beyond, take a deep dive, do your own research above and beyond the clickbait YouTube education you've been getting out there. But long term, if you think long term, whether you're a primary home buyer or investor, you know, buy in the right market, uh, buy where the numbers make sense, surround yourself with a good team, and invest and stay with your home for the long term. The real cycle will come back. Everything will be back normal. Okay. So that's all I have to say. Hopefully you receive a lot of value from this video. It has taken longer than I would like, but have so much content to share. Uh, great, you know, great data. These data are factual. I didn't make this up, right? So it is what it is. So understand for what it is. And so if you like the video, please smash the like button and subscribe to my YouTube channel. And finally, you know, sign up for our newsletter from our website below. Put your email on there so you can receive weekly great real estate investing contents for free. You can be a free member of our real estate community, so you yourself can achieve financial freedom through real estate investing. Thank you so much. This is Silvan Yi. Have a nice day, and I will see you on the next video. Bye-bye.